All right, let me do a quick sound check here. I just had my computer blink at me kind of funny, so I want to make sure that we are good to go. All right, awesome, Victor. And yeah, I did a dry run of this earlier, and it took about 7.5 hours. So I will, but I think I can ship this down to about an hour for tonight. Yeah, hey everybody, hey Steph. So and part of this, if you've been on some of the other webinars, as I've been using these tools in the room. First of all, other new examples come up, and then also lots of questions come up. And so as the questions come up, that also helps me kind of clarify, like, well, hey, this is another area that you can use it, and yada, 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 and we'll just dive right in. Yeah, and first of all, congratulations, of course, to Danielle and Darrell. We're going to change simpler trading to simpler dating, and it's a place where we like to sell premium, make trades, and find life partners. And so it's a good win-win all around. So first of all, of course, welcome to tonight's webinar. We've got a lot of the languages represented here, although I know not all of them, but try to do our best. But we do get a lot of people, obviously, from all over the US and around the world, so always very conscious of that and appreciative of the audience that's interested in trading and might find some interest in some of the things that we're doing. So with that, let's dive right in. And I kind of, this is one of those where I've got a few kind of an introductory slides and things like that. But from there, what I want to do is just cut right to the heart of, why these tools, what are they good for? Are they really going to help me? Will they give me an edge or not? And I just like to, first of all, just kind of present this in a way where you can kind of look at it and say, okay, great. No BS, here's what it looks like. And then you can just decide from there and to say, yeah, that's something that I could use, or no thanks. Thanks for the information, but I don't need it. So just try to lay that out as clearly as possible. So one of the ideas of just trading in general, and I always like to show a slide like this just to show that, look, for my style of trading, I'm not looking to buy AT&T and hold it for 10 years and click the dividends. Although right now they're paying a 6% dividend, so it's actually not bad, but that's not my style of trading. So what I like to do is just kind of show people like the style that I've learned over time, and essentially learning how to use leverage in a way that grows an account safely and quickly, generating outsized returns. All right, and that's the advantage that we have as retail traders, is that as a large hedge fund, without the liquidity of being able to get in and out of positions at the click of a button, they're happy with 20% a year, whereas traders that have the liquidity available to them can shoot for 20% a quarter or more. And so, which is great. And if you understand that and can take advantage of it, it's a huge advantage versus just, putting your money in a mutual fund. Develop or utilize proven trading setups and systems as part of your daily money-making routine, and know when to stand aside. That's actually huge. Knowing when to trade normally and conservatively, and knowing exactly when to hang on for that bigger trade. And then knowing what the computer-generated algorithms are following so you don't get run over by them. All right, just kind of easy peasy. And then also, too, I always like to let everybody know, what are the best stocks that are setting up right now? And so at the end of this, we'll show you how to get a report on the top 10 stocks in the weekly squeeze pattern that we're looking at right now, because all of them look great in terms of setups over the next couple of months. So all that being said, let's dive into this. So I always like to see like how something comes about, because I don't actually do the same class twice. So for me, it's not like, hey, let's do a class on trend lines. No, I did a class on trend lines like 12 years ago. And so if it's done and it's recorded, there's no need to do it again. But at some point, something comes up and a kind of a itch needs to be scratched, or a need needs to be filled. And typically it's based on feedback and questions. And so the last time that this popped up was at our live event that we did in March. And for the first time ever, we scheduled one-on-one 15-minute sessions where I got to sit down and really dig into each trader's journey. And it really is a journey for everybody. Everybody comes at this from a kind of a different place, a different time in their life. They have slightly different goals, but at the end of the day, there's still that desire for consistent income and avoiding self-sabotage, okay? And we got to talk about wins and misses and what they're struggling with. And throughout these conversations, these are the themes that emerged. And it came down to just wanting to gain confidence when a market was truly turning higher or lower versus just pausing before the next continuation move. It's like, all right, that made sense. This was a big one, just reducing mistakes, both big and small. Now, what I've learned is over many, many years in doing this, it is very rare that you are going to get what I would call the perfect trade, meaning the perfect entry and then the perfect exit and everything worked out perfectly, right? You can make a lot of money trading by not being perfect. However, anytime that you can reduce mistakes, especially the big ones, but of course those small ones add up too, that is money that goes into your pocket, and it saves your self-esteem, frankly. Okay. Better timing on setups like the squeeze. This one came up a lot, as well as other setups. Being able to flow better with the markets instead of getting whipped around. So, a question with this. So, I just out of curiosity, now, for those of you that are online here, we didn't get that chance to have that one-on-one conversation, but I'm just curious if you can relate to this. Have you struggled to find reliable profit targets? Meaning, have you ever been in a trade where you had a target and, it started to go up there and then it reversed and just stopped you out? It's just kind of like, okay, is it just unique for the people that I met with? Yeah, I mean, right? And it's frustrating, right? It's so frustrating. Just having, and what happens, unfortunately, is the market is really, really good about reinforcing bad habits. So if you're in a trade, it's like, okay, let's say you're in Facebook and, it's at 180 and you got a target at 185 and you bought some call options and it goes to 183 and you're excited about how much money you're making. And then 2 days later, here it is at 177. And now your profit has turned into a loss. Well, what happened is that the market just taught you a bad habit. The market taught you that the next time you're in Facebook at 180 and it gets to like 182, you better take that profit because otherwise it could turn into a loss. And what happens that time is it goes to 190. Okay. So the market's very, very good about reinforcing bad habits. All right. And we want to have tools that eliminate all that crap. Okay. So one of the dangers here too is what I call FOMO, and it's the fear of missing out. And I think it's important to have tools where, if you're in a current trade, that whether or not you should be happy with that trade versus becoming obsessed with a new potential trade. Okay. And I think this is important because what happens in a situation like this is that if we let our feelings and emotions take over, what happens is we do start engaging in bad habits like, selling winners too soon and all that kind of stuff. But if we have right tools that tell us, that say, hey, you know what, the stock that we're in, is a good one, stay with it, or there's a clear signal that says, hey, the stock that we're in is no good, get out of it. I mean, it would be awesome to have this same thing with relationships as well, but for now, we will stick with this tool with the markets. And then at the end of this, and how it was all summed up, was a desire for a greater consistency in exits, okay? Instead of the randomness of big moves versus small moves and never knowing which one it's gonna be, is there a way to average out profitable wins to smooth out the equity curve, okay? Or even better, is there a greater probability of one target being hit over another on any given trade in any given setup? So this was all great feedback, and after the conference was over, Eric and I huddled up about this and we talked about it for a while. And after about an hour of going back and forth on some different ideas, he got to work. And then at that point, I had to hop on a plane and work on a book. So just real quick, I've been working on for the last 6 months, the 3rd edition of Mastering the Trade. I finally hit send on the damn book, which I refer to, I would say affectionately, but this time took a lot out of me. And I actually had a lot of help. Henry's got a chapter in there. Danielle's got a chapter in there. Darrell's got a chapter in there on tech. Yet it's 171,000 words, and it just takes a lot of time. But during this time, I went to Africa. That's my son, James. This is an annual trip we did with Richard Branson, which was fun. Got a tattoo. I think that one washed away. But just good. That's where you kind of go out and you think and come back with trading ideas. Now, I'm the first one to say that the huge trades are fun. I know a lot of you were in the trading room the day that I did this $1 million trade on Tesla back in 2014. All right, guess what? They're fun. That was an awesome trade. I used that money to buy a ranch. It was great. But the problem with that too is they can be emotionally draining because then it's like, oh my God, where's the next big win? And instead, at the end of the day, what I'm really interested in is in consistency and continually moving towards greater consistency. Can we rely on a specific amount of money to come out of our trading account every month and use that for what we want? Or can we rely on the idea that we may have a month that exceeds our expectations because we have the right profit targets in place, okay? All the while minimizing mistakes and preventing those big, nasty losses that are hard to recover from. So here's a snapshot from today, and this is all about being patient and diving in at high probability moments in time. And so for a lot of this month, I haven't been doing much, but then got aggressive with Amazon and Facebook and things like that, and then you come in and ready to play. And so that's what I'm looking for. Is just, it's not only that consistency, but it's knowing when to trade small and knowing when to dive in and be aggressive. And a lot of that just comes with clear tools that give you clear signals on what is appropriate right now. Okay, so at the end of the day, trading is a continuous journey. And I'm always looking for ways to refine and hone my edge. And what's interesting is that, new strategies beget new strategies, because you find a new strategy, it's like, man, this works great. And then as you work with that strategy, it actually opens up kind of like the doors of knowledge to other ideas that you weren't previously exposed to. And it's like, man, now I can add this to it. And so, there's always that danger of like too many tools and too many things, but I always look for something and say, all right, here's a potential tool. Is it going to give me an edge on an area where my trading plan is weak, and is that weakness exits? Okay, great. So I want to have filters in place that keep me out of situations that are frustrating, okay? This would be great for trading, and it would be great of life if we had a filter that said, do not enter this situation because it's going to be extremely frustrating, right? I think if you can do that and have something like that that gives you this huge warning flag before you get into a trade, that's going to save a lot of angst and a lot of anxiety, and at the end of the day, a lot of profit potential, right? And then I also want to know, though, when it's time to get ripe to get into new trades that have a high probability of success, okay? So that's the two things that I see there. Is one is knowing when to avoid situations that have a high probability of failure, even though we may not know it at the time. And then two, actually kind of waving the flag saying, hey, now's a great time to get in. Okay. And you know what? I want help with my own impatience. Okay. I sit there and I'm watching the markets and I like to trade. I love trading. I want to be part of the action. But impatience is not good when it comes to trading because it can cause you to make mistakes. So I want help with that. I want clear indications of when I should stand aside. And this helps me stay out of situations that I shouldn't have gotten into in the first place. So this way, it helps me to keep trading as a business. It helps me keep that idea front and center in my mind instead of trading for fun or boredom or whatever else creeps into my brain when I'm passing the time. At the end of the month, I want to make money, period, end. So based on our talks, what did Eric come up with? Now, this to me is the fun part. So I feel a sneeze coming on. So if I suddenly like stop and it goes quiet for a second, just realize that I muted the mic so I could sneeze and not infect you guys. God, it's right there. It's like, come on, look at the light and sneeze. But anyway, we'll see. All right. So based on our talks, what did Eric come up with? First, a very new and cool way to target your true profit potential on every trade. Okay. We'll talk more about that. It's a little esoteric, just in one sentence. The highest probability exit at all times. This is important because sometimes, and in some trades, there's a lot of meat on the bone, and sometimes there's not. Okay, and what do I mean by this? So going back to that Facebook example, if we're here at 180, okay, and we think it's going to 187, but the fact of the matter is, at this point, it's only going to 182. We don't know that yet, but there's a tool out there that does. Okay. That's what I'm talking about. So if we know that in advance and we just take our little profit in that case and move on, that saves, instead of sitting there waiting for something that's never going to happen and having it roll over and stop us out. And that's what I'm talking about, eliminating that situation. Avoid catching falling knives and getting in way too late with the quickest triggers for getting into high probability trades against levels. This is something that I love using for voodoo lines, for Carolyn's work with Fibonacci clusters, for point of control. A lot of times what will happen is there'll be a level and the market's coming down, and then by the time the triggers are saying, yes, it's safe, we're almost at the target. Okay, well, who cares? I want to know down here, is it safe to get into or not, right? I want to know sooner rather than later. Reduce your risk of self-sabotage around exits, okay? Reduce your risk of self-sabotage around exits. Good question. So what about like a stock like JP Morgan? Yes, there are going to be times when you get into a trade and news comes out and it's going to hammer it. So we had a trade in JP Morgan where things were setting up, targets were fine, and then news came out that Italy was going nuts and the financials got hammered. So will there be situations where news can come out and drive a position to your stop? Of course. More the idea here is that just knowing like, hey, if you're in a trade, if it's going to be a small target, knowing that that's what's going to happen and taking off your profits there versus having it roll over and die. So plus, get to know how each stock interacts with its key moving averages, right? Is the best pullback zone the 8, the 21, or the 34? And guess what? Through this discovery of this tool that Eric put together, what we found out was it's actually different for every stock, okay? So the idea that I've always said like, hey, you know what? If it goes below the 21, I'm getting out. Well, guess what? For some stocks, the best moving average to buy on a pullback is the 30-period moving average, okay? And if I had known that, then in those situations, I would have added to that position instead of stopping out. That was a huge aha moment for me. Okay, so let's dive into this. First new tool. I'm a big fan of moving average crosses. I talk about these in the book Mastering the Trade, and I've always said that they're a delayed indicator. But I do like the 8 and 34, or for a faster one, the 5 and 21. Okay, these are triggers or confirmations that a market has held a key level and is now ready to turn. All right, crosses also act as signals for the many algos and black box systems that follow crossovers, so it's good to know when they're happening. So the question here is, what time frames should you be watching and which ones have the most impact? Okay, so first of all, let's step back and just kind of analyze and understand, why are these moving average crosses important? Because it seems, it's like a moving average cross. I mean, who cares? But it actually is a good measure of two things. So in this chart, the pink, I guess that's purple, the pink equals the 5 EMA, and then the white equals the 21. So if you think of this, if you guys are familiar with the term point of control, the moving averages are similar. The 5-period EMA acts as the point of control, or essentially where the liquidity and the volume is for shorter term traders. In this case, on a daily chart, that would be day traders. Whereas the 21 acts as the point of control, i.e. where the liquidity is for the swing traders. The reason the algorithms get so interested in is when the point of control for the day traders crosses the point of control for the swing traders, it causes a large pukage of volume. Okay, and that's why you get these exaggerated moves. And there's a cross to the upside, exaggerated move. Okay, now keep in mind here that if you don't get a full cross, like here the 5 come down and it kind of peaks below and you can see the prices fall, but it whips right back up. Right here's a great example of this. We dip below the 21, but the 5 never penetrates the 21. Boom. But when the 5 crosses, you get the puke. So and part of this is that there's a lot of black box systems that follow us, but also it's just the nature of when the short-term traders are freaking out and bailing and versus when the swing traders are freaking out and bailing. So it's just a way to measure all that. Now that happened to be a daily chart, but it works on any time frame. Okay, so here is a 30-minute chart, and on the 30-minute chart, you can see that there's a cross here on Tesla, 5 and 21. Well, from here, Tesla falls from $315 down to $245, okay? You can see here, it crosses up above the 21, but the 5 never makes it, all right? Boom. So same thing here with the cross to the upside, bada boom, bada bing. So, and that's a 30-minute chart. And then if we look here at a 5-minute chart, the same principle applies, okay? And that's what I love about this, is that the principle, whether it's a daily chart, a 30-minute chart, or a 5-minute chart, in this case with the S&Ps, it doesn't really matter. So here we cross, and then once we cross here, you get the puke. So it's just kind of a confirmation of order flow, all right? So that's what I like about it. So the crosses are important. They provide moments in time that show a fundamental shift in both psychology and order flow. They also work on all time frames. So the question is what time frame is the best one to watch? And knowing that if you're able to watch multiple time frames, you can see how these roll from the smaller time frames up into the larger time frames, and that gives you more of an understanding of what is going on in that particular market. All right, whether it's trending up or trending down on the smaller time frames or the larger time frames. It's very powerful when combined together. So what is the problem with that idea? The main problem with this idea is that it is very difficult to watch all the time frames. So if we look at all the default time frames on Thinkorswim, there are actually 18 default time frames, let alone that you can actually add customized time frames as well. So here's the monthly, the weekly, the 4-day, 3-day, 2-day. By the way, a lot of people don't watch these, and these are very powerful. Of course, you have your daily, 4-hour, 2-hour, 1-hour, 30-minute, 20-minute, 15-minute, and then you have 10, 5, 4, 3, 2, 1. Now, I'm not an advocate of staring at 1-minute charts, but what I've noticed is that if the 1-minute crosses positive, and then shortly thereafter the 2-minute crosses, guess what? It's a heads up that a positive roll is in the works, especially when it's against a key level. So for a while, I actually stared at this monstrosity. And of course, not surprisingly, I missed out on a lot of stuff because it really sucks to stare at 18 time frames like that. It gets lost in the noise. And so this is what got me to thinking. We started talking about this with Eric, is first, if we could view hidden time frames, or if we could view multiple time frames, are there hidden time frames or more time frames I should be watching for these crosses? Second, how many time frames should I watch to grab hold of the biggest moves? Third, does this have a cascading effect across time frames that I can visually see and take advantage of? I.e., could we condense more time frames into this and just make this easy to watch? Instead of having 6 monitors, could I watch this on one screen? Fourth, how could I see this at a glance? And that's what we talked about. So Eric dove into this, and this is what he recreated. And I just think it's a remarkable tool. So what we have here, and I've got some more updated examples of this, is that we have the NASDAQ chart. Now you can see that this is a 1-minute chart. And frankly, I'm not super interested in a 1-minute chart, but off of a 1-minute chart, I can now add this EMA cross tool, and I can see what the crosses are doing on every time frame from the 1-minute all the way to the monthly. 18 different time frames at the blink of an eye. And I can see with this at a glance that the larger time frames are all positive. The 3-day just crossed positive. That's what that highlighted ones means. The shorter term in this basis was negative. However, the 1-minute chart just turned up. So what happened on this particular day is that the NASDAQ futures came down to a level. We can see that 30 minutes and above are positive. So the trend is actually higher, even though the 1-minute looks nasty here. And so what we're waiting for, instead of catching a falling knife here, is let's at least let the 1-minute turn higher to show us that there's a semblance of order flow that's gearing back towards the larger time frames, right? And it can, so from there, then you can see, you look for the roll, okay? Now we got the 2-minute. You can see once it starts to cross, boom, you get that highlight there like a Christmas tree, or maybe it's like a yellow light at a stoplight, but it's very obvious when something is turning like that on a different time frame, even though you're not watching that time frame. And so on, and now it goes to the 3-minute chart, all right? And so this gives you the confidence, and if we go back here to the 1-minute chart, you know, guess what? When you see something like this, you can get in with a tight stop. You don't have to use daily ATRs here or anything like this, because all you're interested in is that this level holds, and that's the first sign that's going to hold. So in this case, if it doesn't work, it's not a big deal because it's not a big stop. And then you can see from here as it goes on. So we got in, it's kind of chopping around. I added more when the 2-minute crossed, right? And then when the 3-minute crossed, added more. And it's a nice way to stay confident that the trade is working out. So on this particular day, in addition to trading the NASDAQ futures, we picked up calls on NVIDIA, and more on NVIDIA in a moment because we got some great case studies on NVIDIA. And we also picked up Adobe. Okay, so with this, by looking at this on the indexes, right, and you can of course look at this on individual stocks, but if the indexes are turning, guess what? Your favorite stocks as part of those indexes are also looking to turn, and you could trade those as well. So from here, then you can see as we're sitting in this trade, and then all we do at that point is just sit and look for the roll. Okay. So as you're sitting here and watching this, and now you see the 4-minute go, you're just like, we got the roll. So we get in with a nice entry with a tight stop. We can add to it on the subsequent rolls. And then when you see this, you're like, we're rolling. We got the roll going. So that's what you're looking for here. And then it goes to the 5, et cetera, et cetera. So at the end of the day, these are nice triggers. Okay. So in addition to being a great trigger against levels, okay, whether it's a pivot level or Carolyn's Fibonacci clusters or a voodoo line or basic support and resistance, whatever the level or point of control. I like looking at point of control, and whether it's a buy or a sell against that level, you now have a very, very fast trigger that can give you an accurate reading of when to get in. Or if it's going to blow right through it, you're not going to get any signal at all, which is great. It's also been good for gauging the intensity of a rollover. So say you get short on that 1-minute cross and you're not sure where it's going to stop, and you're just watching, and there goes the 10, there goes the 20, man, there goes the 30, and you just hang on for the ride until what? That 1-minute cross is positive, and then you get back out again. And it's a great way to time the more violent intraday swings like that, okay? So this way, to just keep holding on and not to fight the move, all right? Also, you can use this for, everybody likes to look at different levels. One thing I like to look at is called the point of control. If you're familiar with that, that's I typically watch it on the S&Ps. This was a futures trade where we rallied up to the point of control at resistance. We waited for the cross, and then we got short, and our target was the point of control down here. And on something like that, what we're looking for are just these quick trades. I look at day trading futures. I don't do a lot of futures day trades, only if I am doing it, maybe 1 or 2 a day. But that's what I'm looking for, is to catch a high probability move like that can generate 8, 10, 12 points. I'm not interested in 1 point. Okay, that's too much work. 1 point is way too much work. So, and then the other day, was it yesterday? I think it was yesterday in the room. We were watching the NASDAQ futures sitting here against support, and guess what? We saw the 1-minute go and then the 2, and so we got long the NASDAQ futures, and we just sat there and watched it roll up, which gave us confidence to just hold on to the trade into the close. And so it was a nice $2,300 trade in the last 20 minutes of the trading day, okay? High probability move there, and we were able to time it perfectly. 2 other trades that I'm in right now as of yesterday based on these tools is Facebook. So Facebook was sitting against some key support. We watched the roll start, okay, and we picked up some calls and sold some put credit spreads, and that turned into almost a $9,000 trade today. We'll see what it can do for tomorrow. So I see a question there. Can we use this for both bullish and bearish trades? So Raj, absolutely. It's great. So the bearish trades, I actually like better with this, because the cross, once, when something like, say, rallies to resistance and you're wondering if it's going to peter out or get going or not, and you see that 1-minute cross, that initial 1-minute cross to the downside, you can short it with a tight stop. And then if it just starts to roll, man, and the short side's great because it moves so fast, right? So I love using this, especially against those point of control levels or different things like that. And we'll also show you what I do against profit zones. Yeah, we'll talk about those horizontal lines here too. And then the other one that came up too was Amazon. So we've been watching Amazon, and then Amazon, same thing. We're sitting there, we're watching it, build up on support, and then boom, we start to get the rolls. Okay, roll, baby, roll. Add our contracts, and it turned into a $10,000 trade. Now, the nice thing about Amazon is that there is actually potential for a lot more, which we'll talk about here in a second. So at the end of the day, what I like about this EMA cross tool is that it helps you to kind of get rid of the guesswork. Now, if you're familiar with our multi-squeeze tool, these two actually work well together, okay? So, a lot of times we'll make a tool, it's like, oh, well, what are you gonna do with this one now? I love these two together, okay? So on the top one, you have the multi-EMA cross tool looking at 18 time frames, and then the bottom one is the multi-squeeze tool looking at squeezes, all right? I have found that to be phenomenal because you can just sit there and say, oh, great, we got a 4 and a 5 and a 10-minute squeeze on the S&Ps, and those same time frame crosses have now turned positive. Guess which way that market is probably going to go. All right, and that's been very, very powerful. And so, I'll show some strategies on that as well. And another example of this, so here, this is from 2 weeks ago, and this is the S&P 500, the spiders, and you can see that there's a squeeze just sitting there setting up. So we're sitting there, we're looking at this, and here's a squeeze, and we're wondering, gosh, which way is this going to go? And then we see the daily 521 cross. Okay, now before that, guess what? We already saw the 2-hour and the 4-hour cross. So we had a heads up that very likely the daily was going to cross. And that's what I love about these rolls, is that these moves are not out of the blue and sudden. You can see them roll and develop. So in this case, you can buy calls on the spiders or get bullish your favorite stocks, because if there's a squeeze on the index, guess what? That's going to impact almost all the stocks that you like. So here we are at 266.92. 4 days later, we get to 273 and change. A 7-point move in the spiders over 4 days is a huge move. That's 70 ES points if you're familiar with the futures. Those are the kind of moves that you want to be in for. Now, if you had waited for the squeeze to trigger long, guess what? It was already halfway done. That's what I'm talking about, getting into these things early and with confidence. And then, and I've also found this, and we just talked about this too, where I do like using this in conjunction with the squeeze. But probably one of the biggest things, and this was an accidental bonus with this, because I was traveling not too long ago, as I'm sitting there on my laptop in my hotel room, I suddenly had a huge aha moment, because now I actually, at home, and I'm on my office computer right now, at our Simpler Trading office, I've got 6 big monitors. And when I'm traveling on my laptops, I oftentimes miss having all those monitors because, I feel like I'm missing out on a lot of the data. And I suddenly realized that I could actually just do all my trading now off of a laptop, because now I've got all the data that I need on one chart. I don't need all those other charts. Now, am I going to get rid of my 6 monitors? Probably not, because I like them. But now all of a sudden, if I want to go to the coffee shop and just kind of hang out there and, do some journaling and look at charts, I'm totally good to go. So suddenly I'm a lot more portable. And if you only have a laptop or one monitor, guess what? You don't need 6 when you have all this stuff. So that stuff was really cool. So at the end of the day, Eric had developed this. I was like, okay, that's an awesome tool. I love it. Good work. What else do you got? And the things that I loved about this is that it's fast and accurate triggers, probably the fastest and most accurate that I've seen to date. A lot of triggers out there trigger once the move is already well underway, which is oftentimes way, way too late. It also gives clear indications of when just to stay out, okay? It's a clear indication of when to get in, clear indication of when to get out, and a clear indication of, most importantly, when to do nothing, like stay out, all right? Because there's no edge. That's all we're doing, is looking for edge, right? And there's also bigger picture alignment. Are you fighting the path of least resistance? You might be bearish, but if everything is crossed higher and you're bearish, you are not on the path of least resistance, no matter what the news is saying, all right? So from here, Eric and I tackled the question of exits, okay? Because this was the one area where people seem to have the most issues. And what's interesting about this is when he showed me the EMA cross tool, I got super excited. And I thought, well, it doesn't matter, Eric. Whatever else you developed, who cares? This is, this is right up there with sliced bread. But little did I know that what he had created next was actually going to offer up even more opportunities for edge, preventing mistakes, and getting out at those clean targets. So after digging into this, here is what we discovered. Oh, so a couple of questions. Do you have any combo deal for the multi-cross and the multi-squeeze? Terry, that's a great question. So at the moment we don't. So I think what we're going to do is we're going to focus and we're going to get this class done. And then we will, because I do think that and a lot of people that already have the multi-squeeze. So what we'll probably do is to say, look, on Saturdays, figure out something like, hey, for those of you guys that want this, here's some things with that. And so a lot of the times like that, I always ask, I just rely on you guys and say, hey, raise your hand and say, wow, we'd be really interested in this, and and all that kind of stuff, and then we can just work with you on it. So after digging into this zone tool, here's what we discovered. Oh, a couple other questions. Can this be used for day trades? Absolutely, yes. This is awesome for day trading the futures. And by futures, I mean the indexes, but currencies or anything like that. Those roles are effective. Can the EMAs be customized? Absolutely, yes. Tampa Wingman. And so if you've got some EMAs that you like, you can just plug those suckers right in there, which is great. Brad saying, yo, Darrell, congrats to you and Danielle, which is awesome. Renee, you have garbled audio. Yeah, everybody's getting audio pretty good, so I'm not sure what's going on there with you on that one. Yeah, so Coach JW is saying, John, one of the things I find confusing is you're using like the 5 and 21 and Henry's using like the 8 and 34. So, and what I'll do during the class is show you based on like back studies and things like that, which EMA crosses I've found most effective. At the end of the day, are there going to be some that are faster than others? Yes. Are there going to be some that once they go, maybe have a better confirmation? Yes. And so I'll find, just kind of which ones work best. What's nice about this too is you can actually, plug in the ones that you want and just say, all right, I'm going to look at the 521 on this one. And then like, I like the 510 a lot on 30 and 60-minute charts. Those rock. All right. And so I'll show you kind of which ones I found work best for what kind of setups. Yeah, actually, Danielle did let us know that she actually fell in love with Darrell's voice. And then from there, it turned into marriage. So tell your kids to focus on their vocal skills, and it can lead to many great things. Okay, but so let's dive. So this is really cool. This was a surprise for me. So here's the next discovery. Static exits cause the most mistakes. So a lot of times when I've done classes in the past, I have preached the idea of that 1272 extension, scale out, and let it run to the 1618, trail up your stop. And this is a better way. Okay. And what we found is exits aren't one size fits all. So what do I mean by this? For some stocks, in some situations, a 1272 extension works great. Okay. Other times, it can't even get close to that 1272 extension before rolling over and dying. For some stocks in some situation, a 1618 extension works great. Okay. In other cases, once it hits the 1272 extension, it's done. All right. So all this is easy to see in hindsight, but can we know in advance what a stock is likely to do? Okay. Which target will it be attracted to this time around? Okay. And I even as I typed that out, I was wondering if that was kind of presumptuous because, hey, nobody can predict what the market's going to do next, which I agree with. But can we get the odds? Okay, can we get the odds that if there's a stock, it made a high at 200 and it pulled back and it's coming up, can we get the odds that it's going to double top and fail, hit the 1272 extension or the 1618? Okay, and that's what I'm finding is that we can know in advance if we're getting in here and there's a squeeze, we can know in advance there's a high likelihood that it's actually going to fail at a double top. Okay, so great, get in, get out there. The worst thing is when we think it's going to fail at a double top and it goes to the 1618. Well, the only reason we do that is because of fear. It's all emotion based. Now we can do it by logic based on the personality of the stock and the cycle that it's currently in. Okay, we can measure that and increase our probability of success. That floored me because I didn't know that that was actually possible. Okay, so what are some situations and examples like this? So, so here's some examples. All right, here's Adobe. I love trading Adobe. Here's a squeeze. I love squeezes. If you have followed anything that I do, you would know that when I get into a squeeze here, and I'm sitting there in this trade, I am looking for the 1272 extension and 1618. And most likely what I'll do is say if I get 10 contracts, if we get to the 1272 extension, I'll sell 5 and I'll move up my stop. And then if we get to the 1618, I'll sell the other 5 and life is good. Well, guess what? If it comes up here and pokes its head at new highs, but fails and rolls over and dies, that's just a big stop loss. Okay. And I get it. I've been trading long enough, and there's times when I'm just going to get stopped out. But if I could have known in advance that the probability that this thing would fail at a double top, if I could have known that in advance and then turn this into, let's call it, a $2,000 profit versus a $6,000 loss, right? That is a huge, huge long-term impact on your P&L curve, okay? Talk about compounding gains, being able to take some chips off the table for a small profit versus having it roll over to a stop. That compounding effect over time is huge. So the question here is, how would we ever know that this is going to fail here versus getting to there, right? So that's really what it comes down to. Another example here, NVIDIA. NVIDIA is a awesome stock. I love trading this stock. Here's another example of a squeeze, looking for that 1272 extension. And yet what happens was, but at this time I already knew in advance, it poked its head a little above new highs, and then it rolled over and died. Okay, well, guess what? In this case, we knew that in advance. Okay, so how did we know it? We'll take a look at that. And then here's Alibaba with a squeeze, yet this time, not only did it blow through resistance, but it slammed into the 1272 extension. It slammed into the 1618 and kept on going. And guess what? We knew the probabilities of that in advance as well. And now it's like, okay, that's what I'm talking about here. So the question here, and this is the dynamic profit zones, is what, if you knew in advance, the likelihood of your stock hitting the proposed default static target, okay, like the 1272 extension or whatever resistance or support level you're watching, okay? Because typically, there's always going to be what I call a default target. Like, okay, it's the 1272 extension. Now, at least we can know the odds of it hitting that, okay? But then that begs the question, what are the odds of your stock exceeding the proposed target? Now, I don't know about you guys, but about the only thing worse than watching a stock almost get to your target and then fail miserably is taking a small profit and then watching the stock explode. Okay, both suck. So what if you knew in advance the odds of your stock exceeding the proposed target? Or what if you knew in advance the odds of your stock failing to even get near the target? Okay, how much money would that put into your pocket, okay, and keep in your pocket? And so I started thinking about this and the nature of compounding gains over time, and it's pretty shocking. And I'll show you a graph in a little bit here. But so what are these things? So we call them dynamic profit zones because essentially they measure at any given time above or below current price, okay, based on specific parameters. If they're floating above current price, it means that the odds of it going higher are it's the odds of it going higher are the highest probability. And then we start seeing the lines below the price, you'll suddenly say, oh my God, the odds of this going lower are now higher. So what's nice about this is it actually gives you the odds of success. Like, hey, this is likely to go higher and here's its target zone. Or, you know what, this is likely to go lower. Instead of buying the dip, you should be shorting. So that's kind of a cool bonus there. But if you look at this, in this case, here's the squeeze. Here's that 1272 extension. Here's the 1618. And what happens is that these profit zones when it gets up there, are right here and lined up with the old highs. Okay, and so guess what? It's very, very rare, unless there's a very positive news event in this case with a lot of volume, that the stock is going to blow through that. It's actually very high probability that it's going to peter out there. Okay, that is good knowledge to have in advance. All right, same thing with NVIDIA. We're sitting here, we've got a squeeze on NVIDIA, life is good, and instead of going to the 1272 extension, it actually peters out right into the top of these profit zones, okay, which, you know, hey, it's great. When we see that, we can say, guess what? I'm not even going to look for I'm not even going to look for this. Yeah, the 1272 extension is $8 higher than this, but I'm going to be content to take my profit here because we're at the high probability target. And what's great about this is you're getting out, and yeah, it's a smaller profit than you would have had than if you would have, could hit the 1272 extension. But when you're long options and you get a pullback like this, it's devastating. That was a $20 pullback. All right, nobody wants to hold through that. On the other hand, for Alibaba, we can see that when we get into the trade, so here's the squeeze right here, we can see when we get into the trade that the profit zones are actually comfortably up into in between the 1272 extension. Okay, so we know when we get into this that, hey, this thing, the odds of it petering out the highs are actually kind of low because it's got room to go. So we know that going into this trade, so we can actually plan on, hey, if it's going to double, if this thing's rallying up here, we don't need to freak out that it's going to roll over and all of our hopes and dreams are going to get crushed, because the odds in this case are good that it's going to continue going into those zones. And so that's what's nice about this, is that you can still set up the targets that you typically use, but now you've got a tool that gives you the odds of success of it getting to, through, or not even close to those standard targets. So, so for Costco is a trade I'm in right now. The profit zones on Costco are up here at the 1272 and 1618 extension. Okay. Now, for those of you that have been in Costco, you know that we've been chopping around here and having a hard time having a significant breakout here. However, I'm not bailing on the trade because I can see here that, look, we got a squeeze and we have profit zones up here. So it gives me, so I'm not sitting here worried like, oh my God, this trade is never going to work. It's no, you know what? I'm going to relax. I'm going to take a little bit longer term view on this, and I'm going to be patient and let this trade play out. As Jesse Livermore always said, you don't make money sitting. You don't make money trading. You make money sitting when you're in the right position. And this is telling me and giving me confidence that I'm in the right position. Okay. Now, there's earnings coming out tomorrow. Do I really want to hold through, through earnings? Well, that's a whole different ball of wax. I'm most likely going to sell my calls and maybe sell some put spreads, just because of that Ivy crush. But either way, it gives me confidence to hold on to this. Okay. And then for Amazon's one of my favorite longs here, because not only do we have crosses happening all over the place, giving us, telling us to get in, we got squeezes telling us to get in, but look at the profit zones up here. They're at $1,685, and we're currently at about $1,613. And what this is telling me is that, look, there's a lot of room here. Okay, there's a lot of upside potential room here on that stock. Now, it doesn't mean it's going to go up there in a straight line. It just means that the profit potential is there, and it gives me more confidence to hold on to that stock. Okay. Now, here's another example. Okay, this is from the other day. The S&P 500 rallied. Here's a squeeze, and it had a nice rally. But you can see here, if you've noticed, that the S&P 500 is petered out, and that's because it is right into these profit zones. All right. Now, prior to this, it rallied and failed. It rallied and failed, and it rallied and failed. Okay, and that's when there's no squeezes. When there's a squeeze, what I've found is that it'll rally and pause and start to trade sideways, and that's why we've been trading sideways. So with that knowledge, what I did is when the S&P got up to that level into the profit zones, not only did I look at taking profits on longs, but then starting to set up new neutral trades, okay, new neutral trades to take advantage, because now I know we've got a high probability potential for a sideways market. So here's an iron fly. Okay, now for those of you that are newer to options, I got to admit, when I first started trading options and I started hearing people talking about iron flies, it drove me insane, because I'm like, what are you talking about? But the whole idea of this is that really what I'm doing is I'm selling the 273.50 call, and I'm selling the 273.50 put, because I think both are going to lose value as the SPY trades sideways. Okay, and the reason for buying the 278 call and for buying the 269 put is to limit losses in case of a crazy move. All right, so an iron fly is essentially a straddle. It's a naked straddle with protection. All right, so again, don't worry too much about that, but I sold it for $2.75. You can see right now it's $1.74 with 2 days left, and got some profit there. So what's nice about this is that when you can actually employ different option strategies based on where the stock is in the cycle, which is super helpful. So the bottom line here is that stocks do not move the same every time for every setup. Sometimes they will have fantastic moves, and sometimes they'll have average moves, and sometimes they just fizzle out. And what I like about this tool is that now it reduces quite significantly the guessing or hoping for a bigger move. If you know in advance the odds are small, the odds are like, you know what, this thing is not going to have a big move. Awesome. You can still take the trade, but now you know to just, take that little bite of the apple and get out. And what's great about this, it does not, there's two things that I love about this. One, okay, now you can avoid the mistake of watching a small winner turn into a big loser. And then two, you reduce the amount of psychological suffering that happens when this happens to us. Because when we have a small profit that we hope was going to go here, suddenly spank us in the face, it hurts us like emotionally and destroys our confidence, so that the odds are that the next time we have a little profit like that, we're just going to take it, when in that case we actually should have held on. Okay, so not only does it give us the odds of where it's going to go, but for those of you that if you really have experienced a lot of psychological BS when it comes to trading and that kind of stuff, it actually kind of eliminates that too, which is great, because at the end of the day, if we can have clear heads, we can do this a lot better. All right, so all right, question. So are you going to sell Costco before the end of tomorrow? So yeah, I may actually hold on to a few contracts through it because they're longer dated contracts, but I just got to, how much exposure that I want, right? Can you use these dynamic profit targets to take simple directional trades? Eli, absolutely. So what I do, here's what my basic strategy on something like that. So let's say that, let's say I've got a signal down here and there's a target here. And again, I'm just going to use Facebook because that's the example, and Facebook's at 180. My basic strategy is to buy an in-the-money call. So let's call it a $175 call. All right. And then, if we get up to my target at 185, I just close it. So maybe I buy the call for 7 and I sell it for 11. All right. I'll do that all day long. Now, if you know a lot about options and other strategies, you could have also sold a put credit spread. You could have done a butterfly up here. There's a lot of different, you could have done a vertical, yada, yada, yada. So if you know a lot about options, there's a lot of things you can do. But at the end of the day, there's nothing wrong with just buying a call if you get a bullish signal, or buying a put if you get a bearish signal. As you learn more about selling premium, there's certainly some advantages to doing that as well. But you can keep this very, very simple. And of course, you could just buy the stock, right? If you trade futures, buy the futures contract. So the beauty of this is it's directionally based, which is how I cut my teeth and how I prefer to trade. All right. Yeah, you know what? We'll stick around here and we'll look at some current stocks, and we can evaluate those too. But let me show you one more thing here that Eric developed, which is pretty awesome. All right, so this is called the Deep Stats tool. So I thought Eric was done. I'm like, dude, I didn't say dude because, but I said, man, these two are great. I'm excited because I'm going to start using these right away. I love the idea of sharing these with people. And he's like, well, I got something else too. I was like, we don't need anything else. Well, he's like, well, let me show you. So he showed me, and he showed me this because he knows I like to geek out on stuff like this. I love digging into the data. So I will just tell you straight up, warning, this tool is not for everyone. So I've only got 2 quick slides on this. I just want to show you, and then we will move on. So while the multi-EMA cross tool helps me time entries and exits against levels and confirm setups like the squeeze before they fire off better than anything else I've ever seen, and while the dynamic profit zones measure where the stock probability target is projected this time around for a particular stock or market to help me plan and prevent mistakes much better, the Deep Stats tool displays a record of how price has behaved with respect to its key exponential moving averages it interacts with. Okay. And now when he first told me that, I'm like, who cares? If it goes below the 21, I'm stopped out, so it doesn't matter. And he's like, John, be patient and let me show you this. I'm like, all right. So why is this useful? So as I started digging into this, and Eric started showing me this, and again, I'm just going to tell you, most of you guys aren't going to need this or want it, but I just want to show you real quick. I'll show you this and then 2 slides. So why is this useful? So what if you knew in advance which moving average was the best one for buying pullbacks? All right, so here's a big aha moment for me, because guess what? It's different for each stock. All right, I'm always like, oh yeah, buy the 8 EMA. Well, guess what? For some stocks, the 8 EMA works great. For some stocks, it's the 13. And for some stocks, it is the 32. Each stock has a different personality as it relates to its key moving averages, okay? I was not aware of that. For me, it was all about 8 and 21. It was about static moving averages. If it crosses the 21 to the downside, it's a stop loss. Well, guess what? For some stocks, it's the best place to add to your position. Okay. Or if you knew in advance how far a stock typically moves once it crosses a specific moving average. What do I mean by that? Here's the 8 EMA, price cross up above it and close above. How much does it typically move over the next 4 days? Okay, because guess what? That's a cool stat, and it's different for every stock. Or the odds a stock will hold a particular moving average as it's moving towards it. So here's the 8 EMA, and here's the 21. A stock closes below the 8. What are the odds that it's going to hold the 21 and cross back above the 8? Okay, does that happen 10% of the time, or does it happen 50% of the time? It's different for each stock. All right, so let's take a look. Warning, this is a huge eyesore. Okay, so here's the eyesore. Now, how this works, it's divided up into 2 modules. Okay, so here's a bullish module on top and a bearish module at the bottom. Now, you don't need to look at both, because when something like this is in a clear uptrend, you can ignore the bearish module because it's all information geared more towards downtrends. But at a glance at this eyesore, what it's telling us is that if it breaks below the 8 EMA, it will still stay above the 21 EMA before breaking back up above the 8 EMA 45% of the time. That's huge information, okay? What is the best EMA to buy pullbacks? The 13. So anytime you're at the 13 period moving average, buy that pullback. When it crosses back up above the 8 EMA, on average, it will rally 2.7% over 4 bars. Anyway, a ton of data in there. And for a more recent example, this is for Amazon. So this is a snapshot from today. So for Amazon, what we can see here is that if Amazon breaks up above its 8 EMA, which it did, on average, it will move 5.4% or $86.52 over the next 4 bars. When it breaks up above its 21, look for a 7.9% move or 127 points over the next 11 days. So these moving average relationships are very important. What is the best EMA pullback to buy? For Amazon, it's the 11 period EMA. Okay. If it breaks the 8 EMA to the downside, what percent of the time will it stay above its 21? 44%. So again, it's a really deep dive and honestly unnecessary, I think, for most people. But if you like to geek out on this stuff, I just thought it was a cool tool. So anyway, I just thought that was pretty cool. So these tools all help to provide. Now, what I want to do is let's look at the current market. So you guys, in a second here, start throwing out some symbols, and we're going to start taking a look at some other stuff here. So these tools all help to provide an edge on entries, an edge on exits, an edge on understanding normal behavior for the stock, statistical proof, and less mistakes and errors. And if we can get less mistakes and errors on exits, over time, this has a big compounding effect on our accounts. Now, this is something, and this is the way I like to think of this, is that, you know, we may have an uptrending equity curve, but over time, if we can eliminate mistakes, what is the impact over time of that equity curve? And as you can see, as you go further down in time, the result can be hundreds of thousands of dollars over time. So it's just important to know that when you can eliminate those little mistakes like that, it adds up in terms of the amount of equity that's in your account. All right. So at the end of the day, trading is about continuous improvement. Okay. We have to have an edge over the machines, and we have to have an edge over ourselves. And anything that gives us an edge compounds our gains over time. Now, we've had some early adopters of these tools as of a couple of weeks ago. Here's 2 quotes and some feedback that we've gotten from these tools from people who are using them in the room. These indicators are game changers. They complement the other awesome indicators that I use. I'm now getting consistent profits, and I'm able to have my trades positive for this year. Finally. And don't share this with too many people. LOL, this is the most powerful thing I think you guys have built aside from the voodoo lines. So anyway, at this point, the early adopters that have used this love it. So what I'm going to be doing on this is doing a class on essentially how to use all this stuff, as well during the class you actually get the tool. All right, so we're going to do an indicator training session on May 31st, and then which is tomorrow, and then we're going to do another session on Saturday, June 2nd, and then the strategy part of this class is going to be on June 2nd from 12 to 4 Central. That's this Saturday. And then we're going to do live trading sessions from June 5th to the 7th. So you can see this in real time, where we'll be focusing on day trading and swing trading. Okay, so just kind of a snapshot of what this looks like and what you get is that we have a strategy class. The strategy class is a 4-hour strategy class that's coming up this Saturday. Now, if you aren't available this Saturday, guess what? It'll be recorded, so you can still take advantage of the member price. So the member price on this is $497. Now, if you are not a member, don't fret. You can actually click here and sign up for a $7 trial and get the member price. We always like to say, look, if you're not a member, at least try it out. Then you get that 30 days of support, use us and abuse us, and then just cancel it if you don't want it beyond that. But at least you save $200 on the class. From there is the pro version, and this typically tends to be the most popular. It's $1,297, and again, a member price drops it down to $897. And with this, you get the 4-hour strategy class, the multi-cross indicator, the dynamic profit zones, as well as 3 days of live trading. So one thing that's come up here too is for people like, you know what, I work full time. I can't do the live trading. I get that. The dynamic profit zones and the multi-cross indicator together, just by themselves, are going to be close to that price anyway. With this, you get the strategy class. You also can watch the recordings of the live tradings, and guess what? There'll be text alerts, so you can actually see the trades even if you're at work. So I think that's pretty good. Then the Elite is all that, but it just also includes the Deep Stats tool. All right, again, for most people, you're not going to need that. The Deep Stats tool is a huge piece of work, and of course, it's just much pricier. And you can get that as a member price for $12.97 if you want the whole kit and caboodle. So if all you got to do is just type this in, you can't click on it, but you can type in simplertrading.com/DPT, so dynamic profit targets. That'll bring you to this page, and then you can choose which adventure you'd like to do. And you can also give us a call here at the office. We've got a couple of folks here hitting the keg and manning and womaning the phones. All right. Now, yeah, so for those of you that are, so lots of questions. So let me answer questions first, and then we'll look at some other charts here. So one thing is, if you're a member, you got to log in. Okay, so if you're a Simpler Options Gold member, log into the site and then go to this link, and then you'll see it applied. So that's one thing. 2, are the indicators a separate purchase from the class? So good question. So this $497 price includes the class and the indicator. Okay, so one question that'll come up a lot of times is like, well, I actually just want the indicator. I don't want this class. So can I just get the indicator? So typically what we do is when the classes are done, we will release the indicators by themselves. But guess what? The prices actually aren't much different than the indicators with the class. So the class is just kind of a bonus instruction on how to use the indicators and different things like that. But I get it. And if it's one of those things where it's like, I just want the tools, we will release the tools shortly after the class is over. Can we buy an electric copy of the damn book from Simpler early? It is at the publishing house right now, McGraw-Hill. So I will check with them. I know they're going to come back. What they will most likely do is send us back a final version. I know they do frown on us sending an electronic version out. However, I am going to ask them for some discounted copies and free copies, and we'll see what they can do with that. How often has this indicator been successful? All right, so I've only been using this for like the last 6 or 7 weeks. It's a new tool. What I've found is with targets and things like that is that it's increased the accuracy of the targets I've done by, it's right at 35%. Right now, I know that's not a huge statistical sampling, but what I mean by that is it's, on trades where I normally would have gotten out at the 1272 extension, it's told me to get out earlier. So I've been able to book a profit instead of a loss. On trades where I was nervous and like, I better get out here, it's said, hey, go ahead and keep holding on. And I've been able to enjoy a bigger move. All right, and so those are the main things that I've seen. I've also seen that I'm able to get into trades faster against key levels. So instead of sitting there going like, oh man, this thing's already taken off without me, I was able to get in much sooner. And so I've been doing trades like this in the room, as you've seen with futures and stuff like that as well. Why buy this tool? When we subscribe to Simpler Options, won't you provide this info on trigger in the daily video? So that's a great question. So in the Simpler Options room, we do provide trade alerts. But if you have trades that you like to do on your own and you want to analyze it, you'd want the tools. If not, if you're just following our trades, then you don't need to worry about it. I always say, like, a lot of times in the room, I might be in Facebook and then someone else has a question on, Amazon, and either I miss it or I'm moving on or something like that. But at least if you have the tools, you learn to do the analysis yourself. And again, everybody's different like that. Not everybody wants that or needs that, but and that's totally fine. So what's the 35%? Does it lead you to do something different than you would have otherwise done 35% of the time? So part of the main difference is it's just exit management. So I know at least on half a dozen trades, it's gotten me out of the trade early instead of waiting for what I would call a normal target. So I've been able to get out early before it rolls over and dies. Other trades like yesterday where it's like, man, this market's a little shaky. I don't know if I want to go long here. It gave me the confidence to load the boat long because of signals against key levels. Otherwise, I would have missed those trades. So just different things like that. Does the market trend up, down, sideways change affect time frame for dynamic profits? Yeah, so what's interesting is that the dynamic profit zones, and I'll talk about those in depth too on Saturday, but essentially they're able to accurately project the target based on overall trend of that stock as well as the market, in relationship to its moving averages. So it's a pretty phenomenal tool in terms of, all right, if the market's choppy, guess what? The zones are going to be a little, they're going to be a little narrower. Or if the market is in expansion mode, they can take advantage, and take advantage of that and kind of extrapolate that out, which it's a fascinating tool. How do profit zones differ from parabolic SAR? So they have nothing in common. And I'm a fan of the parabolic SAR. But what I found with the SAR is that by the time you get the stop and reverse, so yeah, good question. So let's say you're going up, right? You're going up, and you got the parabolic SAR below it, and you're wondering when to get out. So boom, it gets hammered, okay? And now the parabolic SAR is on top. Well, had you known that the profit zones are right here, you could have just gotten out here instead of holding on for this mess. So again, it's just what I found is it just intuitively allows you to get out sooner, all right, as opposed to waiting for something like that. I love the parabolic SAR. I think it's a good tool. John, is the point of control an indicator on toss? No, it's a weird combination of things on toss. I'm happy to share it with you. I do have all the workspaces for the Saturday class that I'll share with you guys. So anything like that, if you're not up to speed onto it, we can spend a few minutes going over it and why it's important and things like that too. And I do think it's one of those things that you want to keep in the upper right hand corner of your screen and just kind of know where they are. Platform. So the main platforms we program stuff for is Thinkorswim and TradeStation. Now, one question that'll come up a lot is like, hey, I've got Fidelity or I've got Schwab. What do I do? So those platforms, unfortunately, are hard for us to program for, but what a lot of our clients will do is just open up a Thinkorswim account because it's free. You just sign up and I don't even know if you have to put money in it, honestly, but you put in like $1,000. It's not a cost. It's just a transfer. You dump all the stuff on there and you can use that for your signals and still trade wherever you want. So we do see that quite a bit for people that are, if you've been in, like Schwab is a great platform, but they don't really allow custom programming. So that's kind of been the workaround for that. So a lot of the stuff for Infinity, so Infinity has Sierra charts. And so a lot of the stuff we have, we also do program for Sierra charts. JD, you know what? We've talked to E-Trade and Options House before, and maybe we just need to find the right person, but it would be great to be able to work with them more closely as well. Oh, no cost at Toscator? Okay, yeah, so that's awesome. Yes, Pool Boy, absolutely. So I'm a huge fan of TradeStation, and I do get that. A lot of overseas clients can't use Thinkorswim. So yeah, and I continue to use TradeStation and certainly have anything that we're developing be a part of TradeStation as well. Let's see what else here. Dun, dun. Yeah, so let's see here. We can look at a couple of other charts here too. And so let me just review. There's a couple of slides here that'll answer some questions. So one of the questions is members. So if you're a Simpler Options Gold member, that's what those discounts are for. So, and again, I'm just going to be very frank with you here. Just you might as well use and abuse this if you can. So first of all, log in. That way you'll get the discount. If you're not a member, all right, just click here to become a member. Okay, it's $7 for a 30-day trial. Now, if you have no intention of sticking with us, that's fine. Just tell us you want to cancel. Okay, I would encourage you though to milk us for that 30 days all you can. Come into our room, sign up for our text alerts, ask as many questions as you want, and then that way you're going to get all the information you need for just $7, and you save, in this case, $200 on there. Okay. But look, if you don't, if you're like, you know what, I don't like subscriptions, I don't want any of that stuff, no problem. Just take advantage of us. Do the $7 and cancel. All right. Now, for those of you that you'll see that there's a lot of value in the subscription, you're in the trading community. If you're at work, you're getting text alerts because we're doing a lot of this work for you and sending you alerts of exactly what we're doing. So there's a lot of value. So don't get me wrong there. But I know that, stuff like that isn't for everyone. And then why a strategy class? So why not just say, hey, here's the indicator, it's cool. So why do a strategy class? So during the Saturday class, we're going to study a game plan for what type of trades to focus on, when to buy calls, right? When to instead do a debit or credit spread, when to use a neutral strategy. So it's going to be options focused, but if you don't trade options, that's okay because we're going to be focusing on the underlying. If you just want to buy the stock, right? Or if you just want to buy futures. Which time frames work the best against Fibonacci levels like Carolyn's clusters or voodoo lines or points of control, okay? How to use these tools to manage your trade. If you're watching a daily squeeze, what time frame should you be focusing on for the cross? I found a really awesome combination for that. What are the best time frames for shorter term day trades on futures? How to decide when to add or when to bail when things aren't working, and a ton of stuff like that. So, and there'll be plenty of time for questions and things like that. And so that'll be the strategy class on Saturday. And of course, the class will include the multi-cross tool. And then from there, and then again, just real quick, the pro, that includes the multi-cross tool plus the target zones and the 3 days of live trading. So the 3 days of live trading, again, if you can't even attend it live, you can sign up for the text alerts and go back and watch it. But it is useful. We'll be doing a lot of shorter term trading in there as well. If you can take off and do it, it's going to be very active. And the goal with something like that is you actually make enough money during the class to actually pay for the class and earn a profit on your class. And then, of course, the Elite includes all 3 indicators as well as everything that's included. And again, I know the stats tool isn't for everyone, so I'm just telling you that up front. But if you're looking at that going like, oh boy, I like to geek out on that stuff, it's there for you. And then if you're newer to options and you just like, look, John, I've never traded an option in my life, you're also going to get a free copy of our Options Foundation class that Henry put together, which is a great class, and it'll get you up to speed on everything that you need to know. All right. And so there we go. So I'll leave this up here for a minute, and then let's just see. I want to see if we want to, let's look at, I'm just going to actually move this over here, and we can look at some other stuff here. So I like to look at charts. So here's how I'm setting this up initially. And you'll see here what I do is that I will have, in this case, let's do, I'm going to squish this over a little bit here, and you'll see what I'm doing is just resizing the window. So I'm just resizing the smaller one so that there we go. So now all of the moving average crosses are on top, and then the multi-squeeze, which is a different tool here, is on bottom, okay? And then this is the daily chart with the zones. So now what I can do is say, okay, well, what's going on with the NASDAQ futures here? I mean, look, the NASDAQ futures had a good run. And guess what? The profit zones are up here around 70. There's around 70.25. Okay. Well, guess what? That's still a good 50 points from where we are. But I want to point out here that if we get up here, I'm not looking for an explosive move through that. So guess what? I know that the NASDAQ is there. So if we have a good 50 or 60 point day, I'm going to be taking profits. I'm not going to be sitting there waiting for something up there. Now, that's off of a daily signal. If you're saying, well, John, I'm trading off of a weekly chart, guess what? You can come to a weekly chart and say, all right, well, what are the zones projected based on the weekly? Well, on a weekly, and this is where I've been cautious about this market here, is we got this squeeze here. And typically when I see a squeeze, I'm looking for the markets to explode. But this is telling me to be cautious here. So, again, I think there's definitely some potential here, but that's telling us to be a little cautious and not get too excited. All right, nothing wrong with not getting too excited. If we come back to a daily chart here and just say, all right, well, what about some other, what about, I'm just going to, pick some symbols here. What about crude oil? Crude oil has been a pretty good one here. Well, you can see here we got into these profit zones and got whacked, but we still haven't seen the zones develop on the downside. All right, so we're still looking for those upside targets. If we look at, well, what are some things that you guys have? What are, oh, no. Okay, great question. Is it only for daily charts or is it for intraday too? So awesome question. So let's actually, let me switch this back up to the S&Ps here. And, let's drop this to a 30-minute chart. All right. Now, on this 30-minute chart, what's interesting is when you start looking at this, you can see intraday profit zones above current price and below current price. Okay. So you can, kind of based on whatever time frames that you like to look at there. I like knowing where those bigger time frames are, in terms of a 78-minute chart. And I like the 78-minute chart. You can see it's kind of like, all right, we got some zones up here on the 78-minute chart. We came down. You can see they popped up here as support, and now we're kind of back up to here. So you can, they do adapt to the time zone or the time frame that you're trading. And if we look at Micron Technologies here off of the daily chart, you can see that this thing has kind of, it's at the upper end of these levels, right? So this is certainly not a place I'd be buying. It's a place where I'd be taking some chips off the table. Alibaba, which is one I'm in right now. And so for Alibaba, you can see here from a daily perspective. So from a daily perspective, we got some zones up here right around 202, 203. So this is a trade I'm in, and because of that, I don't own calls. I sold a put credit spread. And you can see from a 78-minute perspective, we're just kind of banging. For my trade here, I just want it to get back up above 200. So that's certainly within those zones, right? If I wanted it to get to 205, then I would have to reassess my expectations on that trade. So for Microsoft, those upper zones still a lot of room there. We got that squeeze. One of the interesting things here on Microsoft is that the best moving average to buy on that one has been 9 for a while. And then when it goes back above the 8, on average, it'll move $2.41 over the next 4 bars. Okay. Netflix is also kind of in that zone. Right, so good place to be kind of booking some profits here. You can see how it's been pausing at those levels. Apple here has been kind of trying to gain a little bit of steam here, but same thing. It's having to fight all those levels there. All right, so some good stuff there. Another one we've watched is Boeing. And you can see here, Boeing kind of gapped up through here and is now having to kind of build up some steam because it just, it's just right in those levels. So, and compare this to Amazon, where the levels are just nice and, they're just floating way up there, which is fantastic, right? So anyway, we're going to obviously do a deep dive into this stuff on Saturday, which will be great. Let me put this back up here, and then let me just kind of get to any additional questions here. And then just keep in mind that if you would like to attend, all you need to do is type this link into your browser. It'll take you to the page, and then you can choose your adventure. So it'll be good strategies, good tools, and overall, yeah, I'm super excited. This is gonna be a fun class. Not only on Saturday to kind of really dig into this stuff and just kind of tear into the stuff, but the live trading is always fun as well. Okay, yeah, and so schedule. Good question there. So for the schedule, we've got a couple of things going for the schedule, just so you guys know. And I will get my note here. So on the schedule, we've got 2 indicator sessions. And by the way, if you order the class tonight, you don't have to wait till Saturday to get the indicator. You get it right away. I don't know if it's automated or you get it the next morning, but you don't have to wait for the Saturday class. You can actually start setting it up and getting ready for it. So what we're doing is that tomorrow, okay, so Thursday at 3 p.m. and all times are central, we're going to do an indicator workshop. So if you got these and you just want to dive in, that's what we're going to talk about. And then Saturday at 11 a.m., we're going to do the same thing, indicator workshop. And then Saturday from 12 to about 4, give or take, depending on questions, we'll do strategy. And then Tuesday through Wednesday, which is June 5th through the 7th, will be live trading. And then if you can't attend any of this, that's okay. All the sessions will be recorded. And keep in mind for the live trading, if you can't attend, you can get text alerts, so you could still follow along, at the office. And we do have a lot of people that look, they're, I was in corporate America for a long time learning how to trade. I wish I would have been able to get alerts like this, but a lot of people, because our room, you can actually listen to the room on your iPhone or Android phone, and we have an app that gives you alerts. So you can be in a meeting, act like you're interested in what's going on, and you can say, oh, I got an alert, and place your trade mobile and stuff like that. And so it's all stuff I wish I would have had back in the day when I was doing this, but it's just really cool stuff. All right. Neil is asking, are both sessions Thursday and Saturday identical so that we only need to attend one? I believe so, yes. Yeah, and then by the way, at the beginning of this webinar, I did say that we're going to send you our top 10 stocks in a weekly squeeze. So you will get that via email. So the times for the live trading will be just during regular market hours. So during the cash session. So from about 8:30 Central to the 3 o'clock close is the cash session. We typically start a little bit before and then go a little bit after with questions. If the markets are kind of hot and heavy, we may start early and take some of those signals early, but generally we're looking at those cash sessions. All right. And then, yeah, if you have any questions around this stuff, we're here. You can just, give us a call. You can send an email to support@simplertrading.com and get your questions answered that way as well. So that's that, or you can just email support@simplertrading.com without the DBT, but yep, there we go. Thanks, Steph. Yeah, and guys, I'm so glad to be done. That book, it really took a lot out of me. Like I didn't realize it, but I feel like I've been operating on a quarter battery for like the last week or so. I'm starting to feel better, but I'm the first to say that it was not fun. So I know that's not a positive thing to say. It's like, oh, you should be thankful. I'm like, it sucked, but I'm so glad it's over and ready to focus on much more trading and much more looking at the markets. But I'm glad it's one of those things too with the book. The only reason you write a book is because you have this urge to get it out of your head and onto the printed page. And what's even better is having that out. So now I feel like, man, people who pick up the 3rd edition of the book, they're going to be up to speed on everything that we're doing now. And I think that's important. So it's a, pros and cons. Yeah, and I'm super. Look, I love trading. I love being in the room. I love being on the mic. So that's my happy place. And so certainly glad to start spending a lot more time doing that. All right, guys. I'm gonna leave this page up here. Have a good night. Looking forward to working with you guys on the class. Looking forward to seeing you guys. Just look, this is the kind of a tool that can, improve your trading edge, improve your results, and reduce frustration, which to me is incredibly important as a trader, because I know firsthand how frustrating that can be. So if this, puts a little bit extra money in your pocket and reduces your frustration by a factor, that's the goal. So, and I think this is going to exceed all expectations regarding that goal. All right. Thanks for joining us tonight. Have a fantastic evening. And for those of you in the room, we'll see you there tomorrow. Otherwise, and for those of you at the class, we'll see you there on Saturday. All right. Over and out.